And I have the pleasure of being able to say hi to Amelia Bourdeau. It's been such a long time. Amelia, how are you? How
Hi,
long has it
I'm
been?
well. How are you? Can you hear
I'm
me?
doing pretty, yeah, you're
Oh,
coming in loud
awesome.
and clear.
Great.
Do you have anything that you want to share on the screen, or do you want to use your
Yeah,
camera?
I do want to share. Let me see.
Okay.
Let me see. I just have one.
So what's it been,
Yeah.
a few years since you've been on Face?
Yeah, I think it's maybe from the pre-pandemic.
Oh, wow, then, yeah.
Yeah. Hold on, I'm
So
trying to
it's
share
a,
my screen.
yeah, it's the bottom button, bottom green button there for share. So Amelia,
Right.
has been, on all the major financial networks, and I believe that she has a new asset class that she's representing, and kind of a
I
different road that
do.
you're on a different road.
I
So
am on a different road now. Yeah, I'm sorry. It's looking like it's blocking me on some sort of security setting. I want to
really,
share this PowerPoint. Let's see. Advanced. Hmm.
so when you click share screen, it's not letting you in. Is it Zoom
This
or you?
allows Zoom to share your screen. Open system preferences to grant access. That's strange. Let me see if I can do that quick.
Otherwise, we could just talk about it, I guess.
Let me see. Oh, maybe here it goes. Let's see. Blocking me on a security setting. That's strange. I use Zoom all the time. All right. Is this working now?
I
Hmm.
don't have any diamond charts.
No. Oh, here we go. This looks promising.
Okay, it's coming up. All
Can
right.
you see it now?
Yeah, I saw a guy on CNBC, probably one of the founders, I don't know, many, many months ago, talking about how they've turned diamonds into another asset class that
That's right. Yeah.
normally isn't available to, retail investors. So take it away.
Okay. And you can see this, right?
Yeah,
So
I
I'm with, first I'll just going to talk quickly about our commodity, introduce you a little bit to us and what we're doing. And then I do have things to say on markets. So I'm with Diamond Standard now, and Diamond Standard created the world's first regulated diamond commodity. And this is what they look like here. There's a coin and a bar. And each coin and each bar are geologically equivalent to each other. So while they're not exactly the same, they have geological equivalence, which makes them fungible. And that was the big breakthrough that Cormac Kinney, who is our founder, who you saw on CNBC, came to, and that kind of took years for him to do. And there's significant patents around this and significant IP in this company. It's a fintech company and a commodity company. So we manufacture these diamond bars and coins, and you can kind of see here in the purple dots in them, if you can see that, those are all the GIA certificates.
What
So
are the
each,
bars made out of, Amelia?
they're resin,
Okay.
and they have a computer chip inside with a blockchain token. So what happens is all of this is stored on the blockchain. And if you buy and hold the physical commodity, which is these coins or bars, they're stored, if you would like them to be, at Brinks Global Custody in Delaware, which means you don't have to pay
Oh,
sales tax on them. And it
okay.
also means that we have a spot market at Diamond Standard to trade these. So you can come onto our spot market if you own a coin. And if you want to buy more or sell it, you can do that if it's held at Brinks. And all that's exchanged is the blockchain token. So you never have to move the actual physical from the vault.
What
So
are
that was
spreads
another.
like? What are spreads like between the buyer and seller?
Right now, they're a little wide. We have just over 4,000 coins in existence. And I will go through kind of really quick the investment thesis, and you can kind of understand why that is
Okay.
in a minute. But because these coins and bars are fungible, which really was the breakthrough for diamonds,
What does
They are
fungible mean?
fungible means kind of like a gold bar is equal to another gold bar. This
I see.
coin is equal to another coin. So they're
Right. Got it.
interchangeable.
Got it.
So they have been approved by CME Globex as good for delivery. So that's important in the future, to make an ETF, to make, further financialize these products, which is what we intend to do. So this whole process of making the coins and buying the diamonds is all regulated by the Bermuda Monetary Authority, because they are the leaders in regulating blockchain tokens. And it's audited also by Deloitte. And so kind of coming back to your question about spreads, most of our investors buy and hold. And the reason for that is relative to the other precious metal space, diamonds are underallocated. So while the other precious metals, they hold anywhere from 15% of above ground supply, these are investors holding 15% or more of above ground supply of silver, platinum, palladium, gold. And you see that here on this chart. They only hold 2% of above ground diamonds. So, and diamonds are 1.2 trillion dollars, meaning that's the total size of that market that's unallocated. Okay. So it's underallocated to basically the investment community. And we're here, Diamond Standard wants to financialize the commodity. So this is kind of our path that we see to financialization. We have the bar, the coin, the fund. We have a fund. I'll tell you about that in a minute before I get going on markets. And then we're working on futures, options, and ETF. And so what we kind of see over the course of the next, say, 3 to 5 years is a position build, right? As we ourselves buy more diamonds to make more coins to back, the ETF and things like that. So this is kind of similar in our minds, at least, to the launch of, say, like the GLD fund when gold launched the ETF in 2004. And also a little bit like the Sprott Uranium Fund when Sprott launched the Uranium Fund a few years ago, and that natural price rise and position build that took place when the fund was launched. So while people can come on the spot market and trade it, most of our investors see this as a buy and hold.
Okay.
As it's further financialized. And if you want to learn more about it, this is a very basic presentation, but there's obviously a lot more to this. Just go to diamondstandard.co, not .com, diamondstandard.co, and you can reach out to us or take a look around the website and see what you think. So, yeah, it is very interesting. It's good and nice for me to work in something that's a brand new asset class kind of in 2023. You don't really come across. I mean, I've been in the markets almost 20 years, and with the advent after cryptocurrencies, you haven't really seen a new type of asset class. And so it's fun and exciting to kind of work in one now.
Okay, you're a great ambassador.
Oh, well, thank you. So I want to get back to macro markets. And so kind of here we are, and I'll touch on some of the stuff you guys talked about in the first half hour. But, Q1 was really exciting. I won't review too much, but I'll take you to where I think we're going. January, the Fed had signaled a shift in the pace of rate hikes from 25 to 50. Then February, we had like this surprisingly upside surprise to economic data in the United States. It showed real resilience. And the Fed flipped and turned hawkish again, thinking they would have to continue and clip the 50 basis point rate hikes. And then obviously in March, we had that banking sector turmoil and huge bond market volatility, just really crazy bond market volatility. And if you just look at this only goes to the end of March, but you can see here in equities at the top, like the flip from Fed was really hawkish and interest rates were rising in February to, rate cuts got priced in March. So equities were flying. And the same thing, kind of gold and silver. You had a strong dollar in February really weighing on, gold and silver and our diamond commodity. And then at least for gold and silver in March, you had the dollar weakness and the lower yields really, and a safe haven bid too.
Silver was really phenomenal. Haven't seen a month like this in a long time. Yeah.
Yeah. Okay. I mean, it finally decisively broke that key level at 24. And is it a break 25 yet? I think it's, I don't know, but
yeah, it's near 26.
Yeah, silver's on fire.
So
So, and
you
you
didn't
can
get a pop in Diamond X with the rest of its competing
we
asset
got,
class.
I don't know how the chart, we had a little bit of a pop like the week of the actual banking sector turmoil, the SVB, like that March 8th through like the 12th or something, we did pop. But you have to remember right now, diamonds are the majority of gem quality above ground diamonds are bought by consumers for jewelry. So they haven't been completely financialized yet. But
Okay.
we imagine, we believe, we expect that as further financialization takes place, diamonds will act as a safe haven.
What about the Charles is asking about, is there impact from synthetic diamonds?
The interesting thing about synthetic diamonds is the answer to that question is these lab grown diamonds are plentiful, right? So these new companies are popping up all the time with, lab grown diamonds. So they can print and manufacture these lab grown diamonds. The supply is infinite. But for natural diamonds, the supply is really fixed and is going down because a new mine hasn't been discovered in about 20 years.
Like every
So
mining industry, there's no new mines coming online.
yeah, so the supply
right?
of natural diamonds is really dwindling, and so the issue with that, especially if it's financialized, is luxury consumers are always going to want natural. And so what will happen is like kind of the mall jewelry stores will all switch to synthetic diamonds because they're probably not going to be able to afford natural diamonds over the next like 3 to 5 year horizon. They're going to get too expensive as supply dwindles.
People can't buy eggs.
Yeah, right. And the weird thing about it is buying a natural diamond, it will hold some value, in the future. It depends on like how you decide to sell it and what type of diamond it is, if it's rare or if it's 1 carat or under. But a synthetic diamond, it's kind of like a new car. Like once you take it out of the store, it immediately drops in value. There's no resale value on a lab grown diamond.
Okay. There you go, Charles.
So just how volatile the bond market was in March, this is monthly 2-year yield change. So the monthly change in basis points in the 2-year yield all the way back to 86. And the point on the right is March. So look at the drop in March in the 2-year yield and basis points. It's on the scale of what happened to financial markets at 9/11 or, the Russian debt default LTCM more than COVID. So this was like huge bond market volatility we saw in March.
Yeah.
And obviously the yield curve, shifted lower. And so I just wanted to show you, this is the Fed's March forecast, the dot plot. And then just the thing I wanted to show you quick about here is for 2025, look at the dispersion in forecast. It's all the way from like 2.5 to like 5.6. So there is no clear path. Obviously there's a lot of disagreement within the FOMC on the future path of rates and how the US economy will shake out. So there's a lot of uncertainty.
Do you think we've seen the high in the 10-year up there at 430?
Yeah, I do. I do think we're going to start to, just come lower. Okay. We have kind of, both equity and bond market volatility have come off, but bond market volatility is still elevated. But you do have a real spread between bond and equity market volatility. And I guess as you guys noted earlier, equity markets are kind of chugging along in the US. Like they're kind of skipping any kind of economic slowdown. It's like the Fed hike, now they're going to cut and we're going to be fine. So equities have been surprisingly resilient, post this kind of banking turmoil that we saw. And, we just still have, you can look at CPI on the right. We still have CPI pretty elevated, coming down, but elevated. And I would just note that the headline CPI, which is that gray line falling, coming down from a peak of 9 to like a peak of 5, now 5, latest reading. The latest decline in March was led by energy. And we just had that OPEC announced production cut that's going to start in May and run through the end of the year. So I would say just for headline CPI, that's not helpful.
No, it isn't.
Yeah. And just quick looking at credit conditions, all of these were out post the banking turmoil. So they surveyed through the end of March. And this is small business credit conditions. Is it easier or harder to get a loan compared to 3 months ago? And you can see it's getting harder.
Where was that low point in the GFC?
Yeah, that was in the
Okay.
GFC.
Okay.
So we're not approaching that, but it did move, got harder. And this is New York Fed's consumer expectations for household credit availability. Is it harder or easier to obtain credit than a year ago? And it took a little leg up. So household credit access perceptions are deteriorating post that banking sector kind of turmoil. But of course, they have been deteriorating since the Fed started hiking rates back a year ago. But now they're kind of at a high in terms of high credit.
So what are you thinking with all these things, market-wise, dollar, market,
just
what do you
quick,
think?
one last chart, and then I'll tell you. I just wanted to bring this one up because this is like pretty important. This is a Fed funds forecast here in black.
Yeah.
And this is the market, the futures, Fed funds futures pricing. So what the Fed is forecasting and what the futures are pricing are very, very different from each other.
They sure are. So what do you think? Who's right? Is the Fed going to cave, or, maybe their pivot is just like that previous chart, and they just hold steady. They pause.
I mean, if they cave, it would be the fastest like turnaround time in recent Fed history. So this is like the peak rate here, months of hiking, months to first cut. You see like 5, 7, 14, 7. So if they hiked in May, which is the market's expecting, and they cut in July, which is what the market is pricing, that would be a turnaround time of 2 months. That would be really, really quick. So I do think, absent another kind of banking shock, probably rates have to kind of reprice at least at the front end. And, that will be dollar supportive when that happens. That could move dollar yen higher. It could cause some volatility in gold. Even though gold is clearly very strong, if you go back and look at charts in March, kind of intraday or over a couple days, it was thrown around a bit by all the movement in US yield.
Could we pull back to 1800?
I don't think that low, because I think people are holding it now. It has a safe haven bid. I think that people expect and I do too, I expect kind of pullbacks, right, in markets throughout the year, because there has been so much aggressive Fed rate hikes that haven't yet fully hit the economy that, I do expect some volatility. So I do think people will hold gold throughout the year as a safe haven bid. And I do think there will be times of dollar strength as well on that safe haven bid as too. And I think, we may see, choppier trading in equities. It won't be this like Goldilocks scenario. That
are we going to take out the October lows in your view?
I mean, we could. It just depends really on the US labor market, if how much that slows and how much consumer spending slows. So the Fed has said, they really want to bring down wages, which are contributing to services inflation. And to do that, they need to get a higher unemployment rate. And so when that adjustment occurs, it just depends on how high that unemployment rate goes and, what consumers, the severity of the retrenchment and consumer spending. It really depends on that.
Well, I'm certainly glad you're still keeping your finger on the pulse of the market, Amelia, because
I am, for sure. I'm a macro strategist there. I talk about diamonds and I talk about markets. And I just wanted to ask you guys, this was like, you talked about Aussie dollar and it's trapped between this 68, 66, but this is the S&P 500. So the S&P 500 is really broken. And it's interesting that even with the strength in the S&P, we can't break topside 68 definitively in Aussie. So I just thought I'd show you that.
It's a weak sister.
Yeah.
Right. So why don't I wrap it with this, Amelia? Are diamonds girls' best friends, or is it community property?
I think diamonds are forever, Dale.
That's a long time, Amelia.
Yeah, it is. So you should buy and hold them.
I'll hold them in my hand with my silver coins, and do people ever take delivery of these things? And Do they have to be stored in a certain way if you took delivery and had them at your house, or are they okay in a box?
Yeah, the majority of our coin holders store at Brinks in Delaware, but there are
Okay.
I probably like 98% of them, but there are a small amount who do take delivery at home.
Okay. Well, all of us here, are fans of yours, Amelia, and hope that the wind is at your back on this new venture, and wish you tremendous success with this.
Oh, well, thank you so much. I really appreciate your support, and everyone, happy trading. And these are choppy markets, but I think as a macro person, I think choppy markets are where there's vol, there's opportunity. So
yeah, and the best way for people to get a hold of you would still be your Twitter handle at Amelia
yeah,
Bourdeau,
you can reach me on Twitter at Amelia Bourdeau. You can reach me. You can, reach out to diamondstandard.co, or you can find me on LinkedIn. That's easy.
Okay, my trading warrior sister, thank you for edifying the community and presenting something that people should have an open mind about, diamonds.
Yeah, for sure. Well, thank you so much.
They saved many people's lives in Europe. The portability of diamonds, before Bitcoin, there was nothing more portable. And there were diamonds that got people across the border during World War II and saved their lives. So they're historically have been good for, as far as it helping people out of, life and death crises. So thank you, Amelia.
Thank you. Feel free to reach out, everyone. Take care. Have a good weekend.
All right, you too, Amelia. Okay. And everyone, the Morning Edge, 20 minutes. And I hope that we added value to what you wanted to accomplish this week. Recharge your battery. I know I will be. And we'll see you on Monday. And don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.